so much for joining me once again on my show. And I know that at the moment you're not, every time you're all over my Twitter feed, as you know, like every time I open Twitter, like it's just full of Pete Wargent. And then invariably there's pictures of you on the beach, there's pictures of you on the golf course. And then if you're not there, you're overseas somewhere, which is what's happened right now. Where are you?
Yes, I'm in the UK this week. Yeah, no, like all middle-aged expats, I guess it's one of those things you don't think about so much when you're a backpacker, but now, of course, parents getting old and relatives getting older. So, yeah, I've been back and forth quite a bit the last few years. So at least we can travel a bit more freely now, so that's good. Yeah, it's been good over here. Obviously, one of the things we'll talk about today is the macro environment around the world. The UK's had more than its fair share of challenges over the past few years, but anyway, things seem to be leveling off a little bit anyway. So, but yeah, it's always good to be on, and thanks for the invite, Cassius.
Yeah, that's all right, Wargie. You're very welcome.
Keep it informal.
You're not in London though, are you? You're out
no.
at the moment. Where exactly?
Yeah, a couple of hours north. Yeah, I used to work in London years ago, when I guess the square mile was really the hub of employment. But like a lot of countries, the focus has shifted away a little bit from London and the southeast over recent years. I think that was happening anyway. Things like the BBC has got the hub now up in Manchester. There's been a lot of talk about moving politicians away from London and decentralising, but that was kind of underway, but the pandemic accelerated that. So a lot of people moved out of London to places like the Cotswolds and other popular regional locations. So just like we saw in Australia, really, just an outward movement. But that seems to have persisted, actually, in the UK. Not many people have got back to the office yet overall, because as you would remember, a lot of people in London commute in from long distances away, like 100 Ks or so, and they're not so keen to waste that time if they don't have to. So there's definitely a decentralization thing happening. And yeah, we're a couple of hours north of London here. Yeah,
that's very interesting. Does that mean that you're seeing like property prices do quite well in the north?
Yes, absolutely. Yeah, if you look nationally, house prices through the pandemic rose about 25%, but there's definitely been the performance has been largely in regional parts of the UK. London and the southeast is lagging. Prices are just only now just starting to roll over, and they're lower than a year ago. But it's really the prices in the southeast that are under pressure, which is the opposite of what we've become used to in the UK. Everything was very southeast focused over the past 20 years or so. But a lot of people not needing to be in London or the home counties now, and they're seeking other parts of the country.
Yeah, I mean, that's quite interesting from a cyclical perspective, because obviously land cycle investor is all about the 18-year property cycle. And in the UK, you can trace that cycle back, gosh, to the 1600s, Fred Harrison has. And you generally start. Can
they go back to 1066 and the Doomsday Book? I'm sure I went to a property seminar back about 25 years ago where they said that housing prices had doubled every decade since 1066, which seemed to me to be something of an outlandish claim, but nobody seemed to question it. So
it was the first. Well, it's the first recorded document. I mean, obviously the land parcels were recorded very carefully in the Doomsday document of that time. So, and that was when tax started to be done on land, and yeah, I've written a little bit about it myself. I'm not going to say that I'm an expert and start going on about it now and making a fool of myself, but you can trace the 18-year cycle back to the 1600s. It's a case of how far back the property data sets go, because you've got obviously electronics that goes back to kind of like, well, in this country around to 1970, but prior to that it's like how carefully they kept records if you're going to relate it to real estate. So then you start relating like the booms and the busts just to financial history and knowledge of financial history, and when there was a boom and when there was a bust. But in England, you can trace that back, you know, in the market sort of to 1600s. And the pattern that was noticed in that was that the southeastern suburbs obviously do well. They're a little bit like the Melbourne and Sydney in Australia, but the other regions start to pick up in the second half of the cycle. So you get this kind of recessionary point in the mid-cycle, and then the second half of the cycle, you'll start to see the regions then get appreciation because of people moving out. But obviously what you're saying is that's kind of, that trend has been exacerbated because of COVID and the work from home and people not going back to the office. And obviously London, yeah, I mean, it boomed, didn't it, over 2020, 2021, like everywhere else?
I think if you went back over the past 20 years or so, the top performing markets over that time have been cities like London, Cambridge, Oxford. So in other words, London and the southeast. And the regional markets got hit much harder by the global financial crisis. In some cases, down 40% or so, much more so than in London. But yes, in recent times, it's been all about the regional markets outperforming. London has been quite flat now over the past half decade or so. And exactly as you said, it's often the case that the big cities seem to lead the cycle. And in Australia, we've seen that with Sydney in some cases, but then later on, other cities following, or in the second part of the cyclical trend. So yeah, there's definitely some things that mirror across from what you might expect to see in Australia as well.
Yeah, and you know, we're very interested in what's going on in the UK because it is so patterned with that cycle and you can trace it back so far. Whereas in Australia, there's been long periods of time in Australia where we just haven't had a boom in the land market. So therefore we haven't had a bust. We've had, you know, we've had policies that have kind of deterred speculation, like the federal land tax and rent controls and everything into the 1950s. So that has had an impact in Australia's cycle. But like, I'm kind of interested in the UK as to, I know that there's been some kind of changes to lending. There was that story that hit the news not so long ago about one bank now having applied to do 100% mortgages. So no deposit, 100% mortgage. And I think they got that approval through and they're now doing it. And then there's the ultra long mortgages that are being issued as well in the UK, up to 35 years, I think it is. I don't know whether they offer a 40-year mortgage in the UK. I think there was talk about that. Do you know anything about it?
I don't know about the specific product, but you're right. The general trend has been towards a loosening. So we're now 15 years on, I guess, from the financial crisis, when in Britain, 100% mortgages, and even in some cases, 105% mortgages and so on were available. I mean, it's a long time now. A lot of water under the bridge since then. And in recent months or over the past year or so, yes, there's been more low deposit lending products back. The Bank of England dropped the lending assessment buffer down to just 1 percentage point. So compare that to Australia, where it's 3 percentage points. It's such a massive handbrake on lending, which I guess is starting to lead towards a housing shortage down under. But yeah, the UK, the general trend has been loosening. I think the bigger challenge in Britain has been the inflation rate went absolutely bananas. It was 12.7%, I think, over the year to March, and it's only just now starting to come back down. So we're back down to about 10. But I have noticed, though, since I've been here, I think that inflationary pulse is now it's certainly leveled off, if not reversing. For example, diesel fuel, which was about £2 a litre, which is extraordinary when you put that into Aussie dollar terms. Last year, but now it's about 135 pence a litre. So it won't be too long before that starts to feed through towards much lower inflation figures. I think you're already seeing it in producer prices and things like that. It's I guess food prices have been one of the big issues as well in the UK. There's a lot of debate about what Brexit might or might not have done to contribute to that, and obviously the war in Ukraine. So yes, Australia's been relatively sheltered in terms of the inflation compared to the UK and some other countries like Argentina and Turkey, where they've just seen mad inflation. But it looks like we're starting to come back down the other side now. The Bank of England has taken the base rate from 0 up to 4.5%. So it feels like we're getting closer to the top, but we've been saying that for a little while in Australia as well.
Yeah, I mean, the feature of the, again, like in, the second half of the cycle really is rising rates alongside rising property prices, which is kind of what we're getting now. I mean, there's an argument that if the RBA really hike sharply from here, they can, abruptly pull up the market or pull up any gains that we've got, because the gains in Australia, as we know, I mean, at the moment, what's fueling that market is the supply demand metrics, with the population flowing into Melbourne and Sydney and into the other states and territories as well. I mean, we've got population growth sort of going on against this dramatic low rental supply, which is leading everyone to, jokes about the immigrants can bring a tent with them because there's nowhere to live. Australia's all full up. So we've got these, rents that are continuing to go up. Still pushing up, but it's not just that. There's not a lot of stock on the market. I mean, I don't know who you're buying for at the moment. I know you do a little bit of buying as well here, and it's been incredibly difficult in my own business trying to turn over clients because there is such a lack of good stock. So just based on those metrics, we've seen the market turn. We've seen the clearance rate start to push up now into the preliminaries are coming in the 70s from the major providers, and the medium is pushing up based on those metrics too. But to really fire things up, we need the credit to come in as well. And of course, we've got that 3% buffer. Some of the minor banks, I know the non-bank lenders have reduced that serviceability rate. I think Rismark have put it down. Is it Rismark? They've put it down to 2%. And some of the others are offering kind of a modified serviceability buffer. But what's your general feel about, what's happening here in all of those aspects that I've just spoken about?
Well, we're Brisbane based, but it's more or less exactly the same dynamic as what you just described. I think it's not like a year or two ago when everything was flying off the shelves and prices were really booming, but there's just a very acute shortage of good quality properties. And when something half decent comes up, there's competition, there's bidding, and yeah, prices are moving actually, but it's not across the board. I think a lot of lower quality properties just aren't selling as quickly. So it's definitely a supply story, lack of good supply. I think normally you'd expect to see listings falling 15 to 20% through this time of year, through to the spring selling season. So it's not going to improve any time soon, I don't think. I think the other, you mentioned on the interest rates point, well, that's pretty interesting because every month we're getting another hike. And it hasn't really worked so far. Last weekend, Sydney's clearance rate for options was nearly 80%, proper boom time levels. So we keep getting the cash rate keeps being nudged higher, then the terminal rates being nudged higher, but it just hasn't slowed things down yet. I guess if you look at housing market modelling, they would probably argue that housing prices overall, they can be impacted. Sentiment will definitely be impacted by the month-to-month changes, but prices are really impacted more by the longer-term interest rates, which I guess if you look at Australia's key funding benchmark is the 3-year bond yield. A year ago it was 3.75. It fell to under 3 for a little while, but now it's back to 3.75. But it hasn't really changed that much over the past. Well, it hasn't changed at all actually over the past year. And a lot of people, I think, the peak of the fear was around October, November last year. That's kind of passed, and people, they can still borrow at around 5.5%, maybe a bit more for investors. So we're not at chronic levels yet, which is stopping people from buying. And a lot of people have just had enough when they're starting to look to get into the market, especially as you mentioned, some renters, they're not happy about seeing their rents go up and they'd rather be a buyer. So yes, it's definitely a supply shortage issue, exactly the same in Brisbane as what you've seen down in Melbourne.
Yeah, and what's your feeling about where the RBA is going to go from here? Because I know that, obviously spoken to Louis at times regarding his analysis in his boom bust report, and he gives these kind of 4 scenarios over where he thinks the market's going to go, and he had this kind of base case scenario that there would be a moderate recovery, which led by Sydney and Perth, which is playing out beautifully at the moment because Sydney and Perth are kind of pushing ahead. I mean, I do a little bit of wheeling and dealing in Perth, and the markets there is pretty strong for properties on green title blocks, so the old suburban house on a full block of land. But he also had these other scenarios written into his analysis, and one was the false dawn scenario. Do you remember that one, where he was basically saying that the markets would start to take off at the beginning of this year, and it would look like we've got, a handle on inflation and everything, but then things would get out of control and the RBA would just start hiking rates again. And that could cause problems as to where we are now. What's your feeling on that? I mean, do you have any instinct about it? Any inside information for us?
I think there's definitely an anchoring thing that goes on. And I think in housing markets, that 4% cash rate target seems to be a bit of a psychological hurdle. I think people have got into their heads that 4% would be possibly the high point of the cycle.
Yes.
And for mortgage rates, 6% seems, it's just one of those things that people have in their heads. And if they can borrow it under 6, well, that's not so bad, But once you start getting above 6, it starts to make a lot less sense for people, definitely for investors, because the yields aren't there. So Louis' false dawn scenario would be based around the cash rate target of around 4%. We're going above that. We'll probably start to see what they call a double dip or a double top in prices. I think, if you look at financial markets, the terminal rate has been inching higher now for quite some time. I think if you look at what markets are pricing as we sit here today, a terminal rate of around 4.35. So one more hike over the next 3 or 4 months, then that's the peak. Then things start to come back down the other side. And I think that's what a lot of buyers have got in their head, is that, yes, it's going to be a challenging 12 months potentially, a bit of a stretch in terms of mortgage repayments, but most people are opting to hang on. Not many sellers coming into the market yet. I think I was chatting to a mortgage broker this week, Chris Bates, and he said, look, some of their clients, particularly portfolio investors, some of them are just looking to offload a property just to free up some cash flow. But we're not really seeing the big selling across the board at all. There's no rush for the exit. Really, listings are, if you look back over a decade, they're very, very low, probably about 30% lower than we'd really expect to see.
Yeah, it's becoming really challenging to find good property. But I mean, a little bit of insight from the people that I've been dealing with this year is that there are a lot of vendors that put their homes on the market and could not get the price that they wanted. So, and also that kind of goes with these off-market properties where they're not advertised, but you'll get a vendor that says, okay, I'll sell if I can get X price. And the market just isn't at the price where they want it to be. And so I know quite a few people that have taken their properties off the market and they're just sitting and waiting until prices get to that level. And so I don't think we're going to see much of a stock shift until we get later on in the year. If the market continues to improve like it is, we'll get through to later on in the year, then you'll see that supply come on the market because prices have kind of got to a level where people can clear the stock that they were trying to do earlier on in the year. But nobody is in it. There's no panic selling or anything like that going on. But that's where I think we'll start to see stock loosen up. I don't know whether you've kind of got that hint of what's going on the ground as well.
Yeah, totally. I think there's also this thing that people don't like to sell. Homeowners don't like to sell if they don't think there's somewhere that they can move to. But at the moment, yes, there's still quite a bit of housing supply in the pipeline. But if you look at new lending for building or buying a new home, it's at the lowest level since September 2008, which, yes, there was a bit of a pull forward through the pandemic because of the home builder stimulus. But at the moment, we're still supplying housing. But if you look 12, 18 months out, just look at the stats, multi-unit approval. So looking at things like apartments, townhouses, well, they're down about 2/3 from the highs. So once this supply starts to dry up, 12, 18 months out, we're heading for a big shortage of housing, especially in the big cities, because that's where the new migrants tend to head towards, Sydney and Melbourne predominantly. And the construction just isn't happening. So that's, I think, another reason why people aren't selling, because they're just a bit fearful that they might not find somewhere to move to. And nobody wants to be knocked out of the market and off the ladder.
Yeah, absolutely. I mean, at the moment, it's cheaper to buy an established home than it is to build a new one. Until that dynamic changes and established prices start to take off, and then people think, well, we'll build, or we'll, build in the backyard or whatever, then you're not going to get a shift in that dynamic. And I know that there's a few sites out there. I know of one site in particular where They went into a joint venture to do a subdivision on a block of land, and the joint venture partner fell out, and now there's this block of land sitting there with a part built home on, and they can't sell it. It's just there's no profit in it there for a builder. So yeah, I mean, it's the dynamics playing out are very interesting, and I always feel like, I mean, again, it kind of comes down to the stuff that the angle that I come from with people, which is that, to understand how the cycle is working, to understand where the major downturns are going to come. And then in between those major downturns, you kind of imagine that property prices are just going to do well. And generally they do. We have more good years than we do bad years, if you look particularly over recent history. So, sort of over the last 3 cycles. But it's still really easy to go wrong with your property investments, and it's still really easy to get caught out. And I don't think anybody would have expected the downturn in 2022 through 2022, sort of through to the end of 2022, when things started to show a few green shoots, to have been as bad as it was. But we were talking earlier, and it is nowhere near on the scale as to what's happening, for example, in New Zealand. I mean, things are turning here now, so at least you've got that kind of, security that the market's picking up, and that, the RBA haven't pushed so far that they've deterred people. But do you want to just kind of go over a little bit? Because I texted you earlier and said, I want to talk about New Zealand. You did your homework on this.
Let me just check my text messages. So yeah, I think, yes, you're right, with Australia, it feels like a bit of a rerun. If you think back to 2011, 2012, and all of the media was talking about, the reason we have high housing prices is because zoning restrictions are too tight, and nobody, you can't get an approval, you can't build. Then eventually what happened was interest rates fell in 2012 from memory. Then prices started rising, and then once house prices started booming, suddenly construction took off everywhere. And it feels a bit the same at the moment. Nobody's getting building approvals across the line. New dwelling starts are falling, new home sales are at decade lows. It's just the whole thing just freezing up. Nobody's looking to start new projects, and I just can't see that changing until you get prices rising again. And I think especially for apartments, because we don't have the foreign buyers that we used to. I think developers are going to need to see prices jump 25% before they're going to get interested again. So it feels like a rerun of that whole cycle. Yes, so New Zealand, well, yeah, it's interesting. New Zealand in some ways is a similar economy to Australia, commodities focus, but it is a smaller economy, only around 5 million people, and it got really exposed by supply shocks. Now, you follow these things probably closer than me, but there was a huge issue with materials shortages in New Zealand. You couldn't get the materials to build over there for a period. It was in the news practically daily. My friends in NZ tell me. So inflation has been a major problem. Very low unemployment, under 3.5%. Inflation rate is still elevated now, and the cash rate in New Zealand has gone from pretty much 0 to 5.5%. That's really hurting. It's a big change, and very quickly. And I think as well, if you look at the housing market, things were coming off a very, very big boom. If you think, prices in most markets are still above where they were pre-COVID. But if you look at the peak to trough declines nationally, about 18%, Auckland about 23%, Wellington 26%. I mean, that's really crash territory for some of those cities. And yes, you could sort of, if you looked at the long run graph, you'd say, well, it just went up and came back down again. But yeah, for sure, if you bought at the peak in some of those markets, that's you're seriously underwater now. So Australia is taking a more considered approach at the moment, anyway, to bringing inflation back to target, and the cash rate hasn't gone quite so high, but we're getting there. So we're already at 4% in Australia, but we haven't quite seen the same kind of declines. But yes, I think New Zealand had its own challenges with border closures, massive supply issues, and labour shortages. So the inflation rate and particularly the cash rate really hurts over there.
Yeah, and I don't know, I mean, if either of us know really enough about New Zealand or on the ground there. I mean, I haven't done any deals there in New Zealand, but as to whether that market is going to change. I ask because I had actually had a question from a subscriber this week that was asking, that's in New Zealand, and that was asking me about the market and saying, you know, what's happening over here? Like, isn't it attached to the same cycle? And I think that's the thing, is that, you know, when you get these very small regions, you know, or the small island like New Zealand is, that hasn't got a large population, then obviously local policy is really going to affect what happens on the ground there compared to a bigger cycle. So it's not like they've gone into a major recession, which is what we would expect at the end of the cycle, but they are, you know, suffering. I mean, is there any indication from your research that the market's going to change or the market's going to turn?
Oh yeah, I think if you were just taking a purely objective view, and if you eyeball the chart, well, things have leveled off, and in some cases it looks like prices, some cities anyway, might just be off the low. So there's definitely an argument to say, if the interest rate starts to come back down, you're going to see prices on the way back up again. And yeah, I mean, historically, if you buy in 20-25% declines, that's always been a good strategy in real estate. And New Zealand hasn't really seen anything like that before. But an obvious caveat here, I travel to New Zealand very infrequently, and I just don't have the insights at the ground level of what's happening. But certainly at a macro level, yeah, prices have come back a long way in some of those cities. And it just looks like on the most recent quarterly figures anyway, yes, prices are way down peak to trough, but they do seem to have leveled off. So, but I think, like a lot of things, probably contingent on what happens to inflation and interest rates. And my best guess is, if we're having this conversation a year or 18 months from now, inflation will have fallen way back, and we'll be arguing about other things. I think, and they do say, as an investor, you should try and invest for how you think the world will be 2 years from now, not as it is today. So yeah, a lot of the focus, and almost hysteria at the moment, is around inflation and interest rates, but most likely things will have moved on by then.
Yeah, I mean, you know, you do a lot of traveling, and I think that you're kind of in a privileged position in a way, because you've the way that your kind of career has done, you've
obviously never flown with toddlers, Catherine. Privileged position is one way of putting it.
So I get looked after when I go on a plane. Yeah.
Yeah,
so, I mean,
it comes with its own challenges.
Yes. Granted, I don't know how you do it, particularly with children and everything. It's not traveling, not the easiest thing, but you know, I like listen to various things that you're doing. And I was listening the other day to, do you want to give your podcast a plug before I talk about what you were talking on it?
Yeah, for sure.
Don't be shy.
Yeah, Australian Property Podcast. I've even got I think you might be able to say I've got the logo on just here. So
you haven't got matching or anything with it on, is it just the outer exterior that you've got?
I've got shorts on, so I won't show you that. But this is a Rask Media podcast. So if you followed previously Australian Investors podcast and the Australian Business podcast, this is the third part of the trifecta Australian Property podcast. So yeah, look, in the first month we hit 20,000 unique listeners, so that's a pretty good start. We have a weekly segment with myself and Chris Bates, where we talk about the 3 big property news stories of the week. We also have Amy Lunardi, who's a buyer's agent down your way in Victoria. So between us and Owen Rastovich, yeah, we're getting some really good guests on. So I'll have to get you on, actually.
Yeah,
we're looking for top quality guests.
Where's my invitation? I'm waiting.
Yeah, we'll have to do a piece on market cycles, because obviously that's a key area of interest.
For sure, I'm waiting now for my invite to come on this podcast that attracts 20.
Yeah, I'll see if I can find you a branded hoodie. So
I'd like that, or a cap. But I was listening to that the other day, and then you said, you went out on a whim and bought a beach hut. Correct?
Yes, that was during the lockdown. So yes, so I was one of those people who I was quite lucky in the early part of the pandemic, because in Sunshine Coast we didn't really get COVID. There was a small smattering of cases in one of the restaurants there, which I won't name. But then it went away, and we had no COVID at all for 6 months. And life was fairly normal, although a lot of the cafes and shops were closed. But you could still live life and play golf and go to the beach. But then I had to travel to Europe for family-related issues, and I had a funeral to go to. And I was stuck overseas, and the lockdowns and the border closures, as you know, dragged on and on. So yes, during the UK summer, I've never set foot in a beach hut before. I think there is, I think I'm right in saying there's a few of them in Melbourne, but they're not really a big thing in Australia. And same in the UK, it's one of these things where they never really build any new ones. So they, the sort of thing that generally hold their value. And I just thought, yes, on a whim, I thought I'd give one of these things a go. But yeah, it's interesting. There's definitely a trend in Britain anyway towards staycation. Far few people are traveling overseas now, partly because of the high cost of airfares. There's also been an energy price shock in Britain and Europe. So there's just you wouldn't believe if you go to some of these coastal resorts, the number of caravans and holiday homes and Airbnbs, it's really gone ballistic. And people aren't traveling to Spain or Rome as much as they were. And yeah, we've had people knocking on the door saying, how do we buy one of these beach huts like this?
Oh, really?
Yeah, so it's a really unusual situation. I wonder whether will that change in the future, or people rediscovering the British seaside resorts? I don't really have any special insights, but at the moment anyway, everybody's holidaying at home.
Well, it interests me because we do have beach huts in Melbourne. We've got them down the coast, sort of from the Brighton ones are pretty well known. And I think there, if I'm correct, you can only buy them if you live in the suburb. But you don't actually own the land. You lease the land underneath it, and then there's all these controls over what you can actually do with the hut, like paint controls and everything. It has to obviously
yeah, so you have to repaint them every second year. That's certainly the one that we've got. It's always funny, you see these news articles pop up on the BBC about someone's bought a beach hut in Cornwall for £500,000 or something, which is plainly ridiculous.
Yes, that's what they go for here is $500,000, not quid, but
yes, it's I don't know. People say this is sort of representative of the housing crisis. I don't think I think it's unrelated in many ways. It's just it's kind of a very niche sort of an asset class, if you can even call it that. But yeah, I suppose it's like a status symbol for people in places like Cornwall or Brighton in Melbourne, because if you can have one and other people don't, it's what they would call a Veblen good, I suppose. That's something that people buy so they can sort of feel exclusive in some way.
yeah, for sure. There's a niche market for it here, and there's been quite a few stories. I remember when I used to do the Circle, the Channel 10 Circle weekly. I did
good old days. I remember. I love the old YouTube videos. My favourite segment was Guess the Price. That was always
Guess the Price. Yeah, we used to do What's It Worth? It was called. What's It
Oh,
Worth?
was it? I'll have to drag that one up. Was that with yourself and Yumi Steins and
Yumi and Chrissy and yeah, that's right. It was.
Those were the days.
Doing it, but I did an exclusive one on a beach hut, and I think I did do a What's It Worth on a beach hut one. But I remember then it was like some of them they go into auction, and there's like a bidding war to buy them. We did it on like unusual bits of real estate, and also we looked at how much it actually costs to buy graves and to bury your loved ones, and the like crazy prices that are being paid. For some locations, it even matters when you're dead, apparently. So I mean, it was an interesting episode, but it kind of caught my attention, I guess, because there is this thing where it's very easy. Property investment, it's not rocket science. But if you don't know a lot about it, it's very easy to go wrong. It's very easy to buy, for example, an off-the-plan apartment and then find, in 5-6 years' time, it's actually worth less than you purchased it for. It's very easy to go and buy, a townhouse that you think is very well located, a small 2-bedroom townhouse. And yet when you come to sell it, you've got no buyer market there for it. And I actually wrote a long edition for my subscribers at Cycles, Trends and Forecasts about different types of real estate that you can buy and how they perform over the longer term to try and prevent them making mistakes. But the other reason it interested me as well, from a Melbourne perspective, is obviously we've had the budget come out in Melbourne, and they've lowered the threshold on land taxation here. And I have very strong views over land taxation, obviously being president of Prosper Australia. But I'm always interested in kind of, you talk to a lot of investors, you talk to a lot of people, and you get to hear about the trends that are happening on the ground. And I'm wondering, have you been in contact with people and investors? Have you had, sort of negative talk about Melbourne and moving out of Melbourne, or moving out of that type of investment? What have you been hearing?
Yeah, that is a very good question. It has come up. So I mean, I do some strategy programs with clients. And yes, that has come up in conversation. I wouldn't say at this stage it has deterred people from investing in Melbourne, but it's been a question. And people have said, look, I'm looking at buying in Melbourne. I've seen a few headlines about land tax. What does it mean? I think when people run the numbers, I don't think it's an incremental change, and it will capture more investors because of the change in the threshold. But I think overall, particularly at a point where you've got very tight rental vacancy rates, I think for investors, a lot of that will just get passed on through rents at the moment anyway. It may be different in 3 or 4 years' time and the cycle moves on. But at the moment anyway, yeah, look, it's coming up in conversation, but it's not stopping people from investing. So yeah, that's it. Look, I think in terms of my strategy, I mean, look, I've been sort of overexposed to real estate over the years. These days, I only really try and buy stuff. If I can buy something that's cheap or undervalued, I think back to Brisbane 5 or 6 years ago, probably 2017, when every media article was about Brisbane's like the ground zero of the apartment collapse, because there was a big oversupply. And I just thought, well, if every media article is saying it's the end of the world, that's probably a decent time to look around for a bargain. So we bought a place in New Farm in Brisbane, which is one of the blue chip areas. And I guess the beach hut thing was just the same. I had some spare cash, and I could see what was coming. There was the border closures. Everyone was going to be holidaying at home, and I thought, well, we can't go too far wrong buying something in a British coastal resort. So I wouldn't get too hung up on the investment numbers for something like that. Yeah, you could probably rent them out for 100 quid a day in summer, but I don't think they would really stack up from an investment perspective. I think by the time you pay for the repaint every couple of years, I don't think the yield is too hot. Look, on Melbourne, I think at the moment population growth is so high, the rental market is so tight, I don't think there's been any impact, but it might be something that comes onto the radar in 3 or 4 years' time.
Yeah, I mean, the vacancy rate is low, and obviously if someone's tenanting their place and there's room to push the rent up without losing a tenant, there's more impetus to do so when you've got higher costs. Same as when interest rates are rising on mortgages. But there are some areas in Melbourne, the CBD for example, where I think the vacancy rate is over 3%. So it's not tight everywhere in Melbourne. It's tight in some places, yes, but not necessarily everywhere. So there are options for tenants still. But the other thing I wanted to chat to you about that I shot you a text about this afternoon was REITs and the opportunities on the stock market. Because obviously there's a lot of people that listen, certainly a lot of my subscribers, they're not necessarily interested in buying real estate. We're looking for investments outside of that kind of follow the same cycle, that will still ride a kind of property boom or more money going into the property market, but you're not necessarily buying a unique piece of real estate. And REITs are, of course, a classic first thing to look at. They've obviously taken a real hammering in recent times, particularly with what's happened with the office sector. But REITs obviously cover a large range of commercial property, and commercial is commercial, industrial, and there's all the different types of commercial property obviously lead REITs to perform in different ways. So let's dig into it a little bit. What's your opinion on what we're seeing? Have we reached the bottom, or are we still, looks like there's going to be a bit of a struggle there?
I think in some ways it mirrors what we saw with the residential market. I think if you went back to 2022, over the year to around about Q3 or September, the REITs index was way down. Not quite by a third, but it was a long way down from the highs. But then there was a bounce. I think we reached that point of peak fear. So, I mean, generally speaking, a rising interest rate environment is not going to be good for real estate, and it's not good for real estate investment trusts either. There's leverage in the sector. People obviously, higher cost of capital is not good for borrowing costs, and it's not good for the index. But we did see after September last year, we kind of moved beyond the peak of the fear, and then we saw a big bounce in REIT values. And yes, I guess if you look back over a number of years, they've been fairly underwhelming, a little bit flat. I think there's a few different things here though. There's obviously different parts to the commercial property sector. I think if you look at industrial real estate, vacancy rates are very, very low. We've seen really just a boom in demand through the pandemic stimulus, and supply is a bit slow to respond in that sector of the market. So vacancies, no issue at all there. I guess the question mark that everybody's got against commercial real estate is what's happening in the office space. I think, yes, for sure, if you've got A-grade office space, people want to rent it, big tenants, that's great. But what about all these sort of B and C grade office spaces? People aren't going into the office now anything like as much as they used to. There was, for a period of time, an argument where people were saying, oh yeah, but because of social distancing, you need more space for the same number of people. But I think, that's kind of a short-term issue, and that was drawing a bit of a long bow. But more broadly, are people actually getting back to the office? Overall, office demand is quite subdued. Some companies, or a lot of companies, have really embraced that hybrid model where you work in the office maybe 2 days a week and maybe at home for 3 days. Well, in aggregate, that's really brought down the demand for office space. So I think there's a lot of people asking, yes, well, some of these valuations where funds have got office space on their books, they haven't been revalued down very much. And is there a bit of a hit in the post there? Arguably, yes, to some of it. I think the secondary grade office stuff.
Yeah, absolutely. I mean, and there's also, rental guarantees being offered on offices in the CBDs. So it's very difficult to work out what the actual value is, because you've got bumped up rents, when you go in to purchase that. So
what would you say to a client in the residential space? If somebody is offering you a 5% rental guarantee for the first 2 years, you'd probably say that's a red flag, right? Why are they offering a rental guarantee? I think it's the same in the office space. If people are offering guarantees around commercial, well, it's an indication that demand might not be all it's cracked up to be, and there's a risk there.
Yeah, absolutely. Any other areas in the kind of commercial market that you've seen opportunity in? Is there anything that is kind of flagged to you? Obviously, industrial's done better, as we mentioned. Anything there that you can recommend?
Well, I think I guess the biggest factor of all is our interest rates peaking or close to the peak. I think if that's the case, then that's good for the sector. I think we're definitely seeing tourism is rebounding. It hasn't fully rebounded yet. International education is booming. So I think the things that will always be in long-term demand in Australia. Student accommodation is a bit of a niche sector. I think things like medical centres, you're never going to go too far on there. The ageing population, booming population. So I think if you're going to invest in commercial property, you really need to have an understanding of what you're investing in and why. And if you're not sure, then a real estate trust gives you just a bit more diversified exposure. Obviously, if you're doing it yourself, buying individual assets, you need to be really clear on what you're buying, who the tenant's going to be, what are the lease terms, what are some of the opportunities you're seeing? I guess do you see sort of niche opportunities in commercial at all?
Yeah, we discussed this the other day. It's quite interesting because I've had clients that we've moved on NDIS properties on, which is
a great example. It's a really good sector, good returns, well-managed properties, and the demand is kind of there. So that's a really good example of if you understand commercial, there's really good opportunities there. There's just some risks, I guess, if you don't know what you're doing.
Yeah, absolutely. I mean, the rental returns are great. They're long-term leases. And the thing about the NDIS is, again, you need to be careful of the property type that you get. But if you can get like really good properties that would market well on the open market, they're built for special you know, for special care and special needs. So, you know, you'll obviously get like a modified build, but there's still properties that could market on the open market, and they're in locations that are very good for land price inflation. So they're in kind of suburban locations where there's landlocked and they're surrounded by other suburbs, and, you know, they've got good amenities and good proximity maybe to the coast and things like that. Certainly in Melbourne there are, and it's almost, you know, the NDIS scheme, I mean, gosh, everyone's taken a cut out of that scheme. The way that it's being run, it's quite it's crazy when you sort of see the cost. You know, the property managers are taking a cut, the builders are taking a cut, the developers and the builders.
Oh yeah, whole businesses have been built on the back of NDIS.
That's
That's
right,
definitely true. I think there's another sector that's going to be very big in the news over the next decade is build to rent.
Yes,
all of the main players, Lend-Lease, Mirvac, they're all getting into the space. And following on from the federal budget, we'll see international funds as well putting money into build to rent in Australia, because we do have a shortage of rental housing, and it's seen or perceived to be a place where steady and consistent rental income can be achieved. So look, at the moment it's very nascent in Australia. It's probably a decade behind where London is, but it will take off for sure. I think there's a lot of capital been raised in the space, and we're starting to see the early developments hit the market right now.
Yeah, and it's almost ideal timing for it, really. I mean, the people that are sort of behind the build to rent and going into that are really but the gains are there. They've got their land tax discounts. They've got 50% land tax slash. I don't know whether it's across the board. There's certain states that aren't offering that, but are being pressured to offer that. But I know, I'm pretty sure Victoria does offer that, and New South Wales. There'll be others, I'm sure, that I haven't sort of read up on. But I mean, the accommodation, you've got the long-term leases. It's not necessarily affordable rental accommodation, but obviously, you know, we need supply. So governments are going to, you know, be encouraging that kind of corporatization of the rental market.
Yeah, I think you're right. The build to rent itself won't be cheaper, usually probably 25% more expensive than the existing rental stock. But in aggregate, if it adds to the supply, then it might bring down rents in other areas if we get enough of it. But at the moment, it's, you know, we're talking tiny numbers, but maybe 5-10 years out, we'll start to get some significant supply from the build to rent sector, which takes some of the pressure off the private rental market. Yeah, that's certainly been the experience in the UK, where about 20% of new housing now is actually built to rent, and in London it's way high, but 40. So yeah, over time it can be a significant player in the market, but I wouldn't expect the rents to be low or affordable. As you said, it's generally targeted at sort of professionals who want a security of a 3-year lease, that security of tenure.
Yeah, it's kind of like the echoes of, you know, big organizations coming in and scooping up, which is what happened in America post the, you know, global financial crisis, where you had the, you know, BlackRock and everything coming and scooping up the, you know, swathes of housing in certain suburbs, and, you know, having them as long-term rentals, and this kind of like corporatization of the rental market, and fitting in with that. You know, you shall, what's the World Economic Organization's little catchphrase that they backflipped on, you know, you shall own nothing and you shall be happy, because it's that same trend again. You know, we've got massive population growth, the cost of housing is getting high, you know, you can't purchase property unless you're in a wealthy position, which means that then you're looking for rentals. Rents are rocketing upwards, and so then there's encouragement being offered to these companies to go and buy, you know, to go in and build long-term rental accommodation. So the cycle really is pushing towards that way. Yeah, so very interesting. And obviously a lot of them are coming into Melbourne, which is, I think that a large proportion of the build to rent sector is being constructed in Melbourne.
Yeah, over half, I think. If you look at the supply that's in the pipeline, just over 50% would be Melbourne. I think it's a bit more amenable for build to rent. Sydney, it's hard. You know, there's places like Olympic Park or Macquarie Park where you can get build to rent off the ground, but it's difficult with land prices and supply constraints in Sydney. So I think, yes, Melbourne will probably be about half of the sector. Brisbane might be a quarter, and Sydney most of the rest. But that can change over time. But Melbourne, it's just the sort of city where you can just feel when you're in Melbourne. It's the sort of place where it's easier to get tower blocks off the ground. There's areas that are really obvious, the sort of, you know, designed almost for tower blocks to be be
Mm.
thrown in there. We saw it in Docklands in recent years, but there's other places as well. Footscray, big supply, supply increases over the years. So I think Melbourne will be almost the test tube case, and we'll see most of the stock go in there initially.
Yeah, are you absolutely right? I mean, the building booms that we've had in Melbourne, historically have been very significant, and should put out the warning there and then, which is do not buy an apartment in a high-rise property. You're not necessarily going to do great out of that investment. You do a lot of traveling, Pete, and I think we should end with words of wisdom from you, because you see a lot of the world and you travel around. I think every time we talk, it wasn't so long ago you were talking to me about where you wanted to go next. But we're talking about Fiji or some island or something. But I'm interested, kind of like, must do a lot of traveling, a lot of thinking, a lot of contemplating. What's your kind of take of, what's your words of wisdom on it as you kind of look around the world, particularly when it comes to people that are perhaps caught in the rat race and unable to kind of get to that point where a lot of people might want to have a lifestyle like you do?
I think Australia, it's an interesting one, because when you live in Australia, you read the media, you read the social media, and there's so many things to complain about. It's interesting, because I lived in East Timor for a number of years, and then you read the stuff that people are complaining about in Australia. It seems so trivial, traffic delays or, the various political machinations. But then, of course, you move back into the country and straight back into it as though you never went away. I think, as somebody who's travelled a fair bit, there's a reason we keep coming back to, southeast Queensland and that sort of coastal strip in Australia. It's a brilliant place to live and to bring up kids. Very high standard of living, relatively safe. That's one of the issues. When you look at what families want these days, good schooling, relatively stable democracy. Let's not go down that rabbit hole today with the Victorian government's various challenges over recent years. But yeah, Australia scores very high. Australia, New Zealand, Canada, and previously UK and USA. So yes, we've got a lot of challenges. I guess the thing is, for people who are looking to sort of escape the rat race, and one of the things that we've done is embrace regional markets. There's brilliant places to live in Australia if you don't have to be in the office every day. Sunshine Coast is where we're based, but there's some superb parts of the country. Whitsundays, Cairns. A lot of people retired to Cairns in the last 2 or 3 years. So if you can get out to a regional part of Australia, yes, it's different, but there's a great country out there. A lot of people have embraced cities like Toowoomba and Geelong in recent times. So but look, overall, in the grand scheme of things, Australia is still a very good part of the world to be, and a lucky country in a lot of ways.
Yeah, absolutely. I think that's kind of like a really good point sort of for us to end on, because you do take things for granted here, but it is the lifestyle here. I mean, I've lived in America, lived in the UK and areas of Europe, spent significant amount of time in Israel, and it always feels, when I come back to Australia, it feels like coming back to a hot bath, because the lifestyle here is so much easier compared to other countries, and the standard of living is so much higher. So
the cafe strip on Ackland Street, you can't beat it. There's nowhere better, I'm sure you would say.
There isn't anywhere now. That's very true, and I expect that that will be our next meeting point when you do come back to Melbourne.
Yeah, so it won't be too far away. I'm usually down in Melbourne every second month or so, and it's definitely interesting to see the changes over the years. It's a big city these days, so I think that's past 20 years. I used to go down there and feel like it was a big town or something, but that's definitely changed now, approaching 5.5 million, and that comes with its own challenges. I think global experiences, once cities go past 5 million, the infrastructure stops working and livability drops away. So those are some of the challenges that are facing the Labor government, Sydney and Melbourne in particular at the moment, is how do we absorb that rate of population growth, because it's very, very high at the moment.
Yeah, absolutely, absolutely. I mean, Melbourne was hit very badly through the pandemic, and it was not a fun place to live at that point. And honestly, we're still recovering. There's still, you know, a lot of shops that just did not recover, and shopping strips that have struggled, that were obviously struggling going into that. But it really kind of like laid the nail in the coffin for a lot of people through that time. So there's still a fair amount of repairing, honestly, to go on in Melbourne. But it is a great city. You know, I do really enjoy living here. So. You won't hear me say that.
I'll have to, yes, you've inspired me. I'll have to try and make a visit over to Melbourne before the year's out. So I'll schedule in a week down in Vic.
Good. Okay. Well, thanks so much. So appreciate you coming on. And yeah, we'll do it again in a couple of months, and we'll see where the markets are, and we'll have another chat.
Pleasure. Thanks, Cassius, and we'll get you on the Australian property podcast
I'm waiting.
in the next
I'm waiting
few
for my
weeks.
invite. I am.
We'll
All
talk
right.
land cycle and land tax. There we go.
Sounds good. All right. Thanks, Pete. See you.
Cheers.